We've got an earnings alert on Cisco. The stock is pulling back from its after-hours high with the company's call now underway. Let's get to Josh Lipton with all the details. Josh.
So, Melissa, let's just dive right into the segments here. Infrastructure platforms. So that is the company's core networking offerings. That was down 15% to $6.43 billion. Street wanted to see $6.85 billion. Demand on networks has never been greater, Chuck Robbins saying on the call. But this area, executives noting, was particularly hard hit by those supply chain disruptions caused by the pandemic. Then there's the applications segment. Teleworking tools are now a lifeline, Robbins saying. Different puts and takes there within that segment. It was down 5% in total to $1.36 billion. But there was a fair amount of talk, Melissa, on this call about WebEx. That's that video conferencing service and Zoom rival. They gave some new metrics there. 500 million meeting participants for WebEx, 25 billion meeting minutes in April. They say that was more than triple the volume in February. Security, by the way, up 6% to a better than expected 778 million. Robbins saying they are seeing solid growth there. And finally, he was asked on the call by analysts, how does he sort of frame what's going on now versus prior periods of economic uncertainty? Chuck Robbins saying we're in a better position today than in times of previous uncertainty. Why, he said, because of the security portfolio, modernizing WebEx, subscription and SaaS with a strong balance sheet. I feel good, he said on the call. They're looking for Q4 here, EPS of 72 to 74 cents versus expectations of 69 cents. In Q4, they do see a revenue decline of between 8.5 and 11.5%, but analysts had thought they would see a decline of 12% in Q4. For more on this, be sure to check out Mad Money Tonight, by the way. Our own Jim Cramer sitting down with Chuck Robbins talking about the print, and I'm sure a lot else. Melissa, back to you.
All right, Josh, thanks so much, Josh Lipton. Guy Adami, I'll go to you. I mean, what's striking, we were just talking about companies getting a free pass when it comes to guidance, and for Cisco to come out and actually give guidance for the current quarter when so much of their revenues as a percent is exposed to public sector, it's exposed to schools, for instance, small and medium businesses. I mean, all the things that are shut down or really harmed in this pandemic.
Yeah, they have exposure to. And to your point, I think that's what, because if you look at the quarter, by the way, I mean, their operating margins came in way above what the street was looking for. The quarter by itself was a very good quarter. To your point, I mean, there are definitely headwinds they're facing, and the guidance they gave for the fourth quarter sort of speaks to that. It's a cheap stock. I think we all would agree that it's not an expensive stock. Yeah, they don't have the EPS growth that you might want, but it's had a lot of trouble at $44. Go back and look. It's failed there a couple times, and it failed there over the last couple days. The way I would trade this stock, if I were inclined to trade it, is to buy it on a breakout above 44, which I don't think you're going to see right now, or wait for it to pull back to that 39.5 level. Right here, you've gotten back half the day's losses, but I think no man's land. So breakout above 44 or 39.5, Mel.
Dan?
Yeah, your point, Mel, about the public sector exposure, the enterprise exposure, those are going to be some of the areas where I think if you're looking for things to pick on, those would be the headwinds that you would have over the next couple of quarters. But it seems like they've been executing very well. And to your point about their ability to give guidance for the current quarter, given the environment that we're in, that's pretty impressive too. Subscriptions as a percentage of software sales is almost to 75%, and that's up nearly, I think it's up 9% year over year. So that's what bulls are kind of focusing on. I'll just make one other point. Josh mentioned WebEx. That is the Zoom competitor. WebEx has been around a long time. Zoom has a $47 billion market cap, trading about 50 times sales, and Cisco's market cap is a little over 3 times that of Zoom. I think there's probably some value to be unlocked there if Cisco can start to get a bit more momentum in this work from home, learn from home environment over the next year that we're certainly going to be in.